Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Wednesday. In today's program, I want to discuss obviously about the strong dollar and what that's doing to the current currency market, plus a brief history lesson, and sort of tell you why, in my opinion, I don't think we'll have a repeat of that, what happened back then. But before I get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. Now, obviously, the situation in the current economic climate at the moment, especially in the currency market, is we are suffering from very, very strong US dollar. Okay, so US dollar is really dominating the currency market across the board. And we've already talked about this on several occasions. We'll be looking at the dollar yen in a little while in particular. But we've had the sterling in recent weeks hit an all-time low against the dollar. The euro under parity, and now remains way under parity against the greenback. And like I say, the US dollar strength is really damaging a number of other global economies. Not so much for the US, but for the other economies. Because don't forget, a lot of energies are priced, of course, in dollars. So obviously, this is causing an issue. And I want to talk a little bit about something which was said by Christine Lagarde today. And it almost was like a Dear John sort of letter. I know it was, it was sort of like more of a request or a message to Jay Powell, the Fed chair. And basically what she was saying in a nutshell was that the central banks, to control this current crisis they are facing, okay, obviously the inflation crisis, economic slowdown, recession on the horizon, energy crisis, to face this current crisis, they really need to work together. They really need to work together. And here's the thing. She said central banks must work together and they must understand spillovers and spillbacks. What they mean by this simply is they must understand that if they do a certain action, like aggressively raise interest rates quicker and higher than you can against a rival central bank, that's going to have an impact on that central bank's currency. Okay, so you need to work together in collaborate, working together to fix the issue, work together on this. So this is what she was saying. And it made me thought about, is there any chance of us having a repeat of what happened back in 2009 with the financial crisis? Okay. Now, we all know, and Christine Lagarde says this, all central banks talk to each other. Okay. They talk to each other and let the other central bank know what they're about to do before they actually announce what they're going to do in relation with interest rates. They give them the heads up, in other words, so they can make sure that they are safeguarded against any market repercussions. They do this. They communicate about letting each other know what their plan of action is. But apart from the SNB, the Swiss National Bank sometimes doesn't let other banks know, like the famous Black Swan event of January 2015. Anyway, but that's another history lesson. But anyway, my point being is what happened in 2009. In 2009, it was the catalyst of the financial crisis. Now, Gordon Brown, the UK Prime Minister at the time, he managed to gather all the central bank heads, the Fed, the Bank of England, ECB, BOJ, everybody together. They all got together and they all agreed at the same time in unison to reduce interest rates, and to, get on top of this financial crisis and start looking at doing QE. They all agreed to do pretty much the same thing in unison to help out the economy, because they know what one bank will do will affect the other. But they all realized at the time they were in the right mess, so they worked together. The question, I think, can we see a repeat of that happening now? My answer is no, I don't. Reason why I say that is because all the different economies, the UK economy is vastly different from the US economy. Same as the Eurozone economy, vastly different from the US economy at the moment. The US economy, though, is showing real big signs of slowing down, is still performing a lot better than both the UK and the EU. UK and the EU will fall into recession a lot sooner than the US will. So the US and the Fed can do a lot more. And I don't think they're going to be holding back. So I don't think we'll see a repeat of that. But ideally, if we want to sort of, get through this current economic crisis, which we're going to be facing very, very soon in 2023, then they have to work together. But unfortunately, I cannot see that happening like it did back in 2009. The other reason why it happened back in 2009 quite successfely is because the US was really in trouble back then. They had a really huge housing market crisis, a lot bigger than the rest at that time. So that's probably more reason why they were willing to play ball back then. Now they're not feeling it as much as the EU or the UK is as of yet. But anyway, moving on. Just a little share that. I just thought, seeing that speech by Lagarde made me think about that. That's all. Because that's what she was clearly trying to say. Anyway, dollar yen has hit a fresh 24-year high again today. In fact, it's at the highest level since August 1998. 1998. So it's at very, very high levels. And the reason for this is, yes, okay, we mentioned it this morning. It was approaching those levels where potentially it could, the market might expect the BOJ to intervene. The BOJ has not so far intervened. But the reason why we're seeing an awful lot of dollar strength is, of course, again, two different contrasting central bank policies, two central banks going in totally different directions. We have a Fed very aggressive with interest rates, and you have the Bank of Japan, who also commented today that they are not changing their monetary policy with a very light and loose monetary policy. You've got one very aggressive bank, one extremely dovish bank. And this is why this pair, or the yen, is really struggling against the dollar. And we'll bring it up on my chart at the moment in a second. And like I say, at the moment, we're approaching, and here's the question the market needs to ask on this. It's approaching the 147 handle. That's a really good question, my friend. Hello, David. I hope you're really well. Any thoughts on how the ECB would try to approach this in the near future? I like getting the Fed on board. I'm not sure, but what they might do, because again, this is a point I'm going to be speaking about in a little while, is that again, I can't see it happening. Obviously, the UK bond market, the gilt market at the moment, is under a humongous pressure, and obviously, there's a lot of concern with the UK market under pressure. Will there be contagion across all the other markets? Now, there was talk a little while back, ages ago, of doing like a UK EU bond type sort of package together, which I can see very, very unlikely to happen. The ECB at the moment is in a better position than the UK. They will continue to raise interest rates themselves. They have to, possibly by another 75. But I feel that for them, in the winter months, that's when we're really going to see a lot more. And I think, they will try and batter down the hatches for themselves, try and work more maybe in unison with the UK. The UK is going to be very much in trouble before them. But like I say, at the moment, I can't see any backtrack from the US Fed, because that's really what needs to be done. The US Fed needs to get on board and discuss it with the rest. So really, ECB needs to look after, what they can do for themselves at the moment before the energy crisis really kicks in, and try and do some maybe a bit more working together with the Bank of England. But the Bank of England are really in trouble because they say they got their own government, which is flying off the handle as well. But brilliant question, by the way. Thank you for that. I really appreciate that. Like I say, yes, so the BOJ, it's 147 level. Will it get to that level before the BOJ actually intervenes? And let's have a quick look at the Bank of Japan. The dollar yen is at the current moment in time. And like I say, look, if we put this on a daily, we can see we're still maintaining way above that trend line. The uptrend. Currently trading at 146.83. Next real test. Like I say, these are the levels. Last time, the Bank of Japan intervened 2 weeks ago. 2 weeks ago they intervened, but it was a small intervention. The last time they intervened, the dollar was at these levels back in 1998. If it gets to 147, can the Bank of Japan let it go like this? I mean, at the moment, they have got a bit of wage growth in their country. Their wages are going up. So they might be happy to let it go a little bit. But how long can they let it go? They keep telling us, they told us this morning, the warning, we're watching it very closely and we're getting ready to do whatever we're called to do. But like I say, we're past the levels where they intervened last time. But really now the eyes are on 147. The dollar bulls are really going to push and see how far they can do it before the BOJ intervenes. So that's the thing. Like I say, again, the US dollar breaking everybody's stuff. Another interesting story. Again, we spoke about this. I spoke to it briefly about that brilliant question I got. There is real fear now. Okay, because obviously there's a real crisis developing in the UK at the moment. Real crisis. Ever since the Bank of England had confirmed they're taking the safety measures off, or the stabilizers off the bike, so to speak, on this Friday with the bond market. And the bond market is under the microscope. And there really is fear that that this crisis in the UK could spread into Europe and eventually into the US. Usually the rule of thumb is if the US catches a cold, the usual rule of thumb is if the US sneezes, then the world catches a cold. Or if China sneezes, the world catches a cold. Usually the Bank of England, again, it's a lot different economy. But don't forget, these are Bank of England is still a massive financial market, massive financial hub. It's still a really big chance if this crisis keeps proceeding to develop even more, and the Bank of England doesn't prop up the bond market. I mean, it's what's scary is what's happening after the 14th, what happens after Friday. That's what's scary. And could this crisis then carry on and affect everybody? And this is one thing which is really preying on the market's minds today. We'll have a look at the sterling and everything else again in a minute as well. Another interesting story I read today, which I'm going to share with you, and we'll pull up the stock price as well. Don't forget, we have earnings season coming up. Okay, obviously we've got some of the big banks starting on Friday, on the 14th. JP Morgan, Morgan Stanley, Citibank, Wells Fargo, just to name a couple. But then we've got full-blown earnings seasons. Now, there is a big concern. This is obviously going to be music to the Fed's ear as well. And I'll tell you the reason why it's going to be music to the Fed's ears. Is there's a big concern that a number of automobile manufacturers, okay, are really going to start to struggle in the remainder of this year. And there are a lot of growth forecasts or profit forecasts are being cut. UBS, in fact, has downgraded the growth forecasts for a number of automobile manufacturers, including Ford and Volkswagen. The reason for this is now, is beforehand, and this will be music to the ears of the Fed, and I'll explain the reason why that will be the case. The reason for this is because, obviously, with high interest rates, slowing down high inflation as well, is slowing down consumer spending. Okay, and don't forget, when you buy a car or anything like that, quite often you need to take out a loan to do that, unless you're Musk or somebody like that. You often need to take out a loan, and obviously with high interest rates, it's more expensive to borrow that loan to buy the car. So what the problem is, a number of these manufacturers were doing so well. Just after the end of the COVID pandemic, when people started going out and spending their money again, that they could charge as high prices as they wanted because supply was short. So you had supply bottlenecks. Now, it's not a supply issue anymore. Now it's a demand issue. And now a number of these automobile manufacturers have so much large inventories, which they cannot sell and get rid of. So now they're going to have to start bringing down prices. That's what's going to be music to the ears of the Fed, because that means hopefully we start bringing down inflation as well. In the past, when supply was low and demand was high, they could charge higher prices. But now there's inventories are growing and there's not much demand because of high interest rates and obviously high inflation and slowdown in consumer spending. They got larger inventories, so prices are going to start to drop, which means their profits are going to start to drop as well. So this is one of the things. Would it force car manufacturers to move operations abroad to cut costs? Again, like I say, there is a number of massive car manufacturers, don't forget, have a number of factories all over the world. Tesla, for example, has a plant in, I'm trying to remember whereabouts in Germany. Is it Berlin or Tesla? And so Tesla, I think it's Frankfurt or Berlin. I think it's Frankfurt they have. It might be Munich. But anyway, they have all these sort of bases set all around the world. They have one in Germany, one in Shanghai. A number of car manufacturers already have their stuff across. The only slightly cheaper things, don't forget, with a strong dollar as well, is going to be obviously labor costs. But I don't think they will look at moving their operations abroad to save on costs, because that's not necessarily the problem. The problem is they got too much stock. They got too much stock now. They've got a massive inventory which they cannot get rid of, cannot sell. That's the problem. So moving their operations abroad at this stage won't necessarily solve the problem. So this is the problem. What they need to do is get demand back up again and get the inventories down. And it's not just car manufacturers. That's a great, by the way, LD David, that's a great question again. Really is a great question. I really, really appreciate that. I really, brilliant question. Thank you. But like I say, it's not just automobiles having this problem. Don't forget, we've got Target, Walmart, Costco. They've all said this as well. They've all said they've got large inventories, and they've all downgraded their growth forecasts and profits. So, like I say, my point of this being was that the car manufacturers are coming into play, and we are at the beginning of earnings season, which could prove to be extremely, extremely interesting. But let's have a quick look to see how the market's doing. Let's start off with Ford. See where Ford is on the back of this this announcement by UBS. How it's open today. Okay, so like I say, it's a bit. All right, it's a bit choppy, obviously, if we can have a look at Ford. A bit choppy. Has opened, obviously, lower for the day. So, like I said, that they did have some, obviously, downgrade on their forecast and growth forecast before this anyway. But again, like I say, as this comes up, as earnings come out a bit sooner, this could be even more of a developing story. Let's have a look at the euro dollar again, because dollar is breaking our stuff. Again, as you can see, sheer dollar strength at the moment. On the day, though, we look at it on a daily. Again, it's really, really been pretty tight today. And obviously, we all know the reason why. They're waiting for two things, which is happening tonight, but the big one, which is happening tomorrow, which I'll speak a bit more about in a bit. But currently trading at 0.96827. The sterling, it's been a really choppy day with the sterling, all because of the Bank of England. Currently really capped at that key area of interest at the moment, 1.1060, currently trading at 1.054. Dollar, again, we've already looked at. Let's look at the S&P 500. Again, oh dear. Okay, it's like I said, we touched pretty much neared new 2022 lows yesterday. We're still hovering around those 2022 lows. As it currently stands, we look set for potentially another, 1, 2, 3, 4, 5, 6 day of losses. NASDAQ is also very similar. Again, pretty much close to 2022 lows as well. 10,782 points. Gold, I know I'm always going to talk about gold. Pretty flat again today. Why? Because we're waiting for something happening tonight, which I'll talk about in a minute, and obviously waiting for something tomorrow, which I'll talk about in a minute. Currently trading around that key potential area of interest, $1,667. If we look at Bitcoin as well, still pretty much range bound, still performing a little bit better than the major currencies, than say the sterling and the euro. Still trading in that range of a $20,355 potential resistance and a potential key support of $18,438. So anyway, like I say, in general, apart from the Bank of England today, apart from, like I say, that interesting comments that Langard made, the market really is waiting for what's coming up later today, which, of course, is the FOMC minutes due at 6 p.m. UTC. Now, this will hopefully give the market heads up and a bit of a hint of what the Fed might do next, and the Fed's opinion of the current economic status of the United States. If they're slightly dovish, they look for dovish comments. They won't. They will still be very hawkish driven. I'm pretty sure of that. In fact, the market is actually pricing in for November a 92% chance of another 75 basis point rate hike. However, this FOMC minutes could shed some more light, or maybe give a little bit more maybe a bit of confidence to the bulls to take over. Maybe they read in between the lines for some dovish comments in there, which they have done before in the past. So anyway, that'll be interesting. But the main event, of course, is happening tomorrow, and it's not the German CPI. Have a guess. It's, of course, the US CPI. And that is happening tomorrow, because potentially this could be a massive market mover, I, of course, will be doing a tixee Live watch along for this event at 12:20 p.m. UTC. Don't forget, the expectation is for the reading to come in 8.1%. This is year on year. It's the headline. Okay. Last time on September the 13th, the last CPI reading, okay, it came in and it was expected 8.1, but it came in at 8.3, and the markets came under humongous pressure, huge volatility in the markets. This is why this could potentially be a key event. If we get a hotter than potential reading, so around 8.3 and higher, we could potentially see real pressure on the markets once again. If we get a lower reading, below 8.1, maybe even better than that, we might, just might, see the market potentially get a little bit of a boost, thinking that the Fed's going to be gentle, which the Fed won't be gentle. They'll still be kidding themselves. But anyway, we could have that. But still, this is going to be potentially a major event. So please come and join me for that tomorrow. Other things coming up, of course, I've already mentioned this, but I'll mention it again. Earnings season, going to be really interesting. JP Morgan, Wells Fargo, Morgan Stanley, Citibank kicks it off on Friday. The European markets, how they currently trade or currently stand. FTSE in the red, negative 0.90%. DAX currently trading negative 0.19%. And Eurostock 50 currently trading negative 0.21%. But everything is waiting for what's happening tonight, but really, what's happening tomorrow. Because that potentially could be absolutely massive this week. And I'm really looking forward to it. Don't forget, you can jump in with questions like Mr. LD David did, which was brilliant. I really appreciate that. I really do. It's great questions. Thank you. Or just share me your opinion even, because this is a live broadcast. An idea is to, have an honest, open chat, share people's ideas and what they think. Or simply say hello if you like. Great stuff. Thanks. That's really brilliant. I really appreciate that, David. I really do. Thank you for your interaction and thank you for your questions. I really appreciate that. Thank you. I really do. Okay, don't forget, if you think of a question later, you can always put it in the comments section, either on YouTube and Facebook. In fact, actually, I've just remembered saying that there was a young lady left a comment in this morning's video, asked my opinion what I think will happen with the US CPI. Again, I don't want to predict what the reading is going to be. I think the general consensus at this moment is going to be 8.1. But all I would say is if we get anything between 8.1 or 8.3 above, then I potentially see the market coming under pressure. If we get a lower reading than 8.1, then I can potentially see the market get a bit of a boost. Thinking again, like I said already, that they might think the Fed might be gentle with them in the future. But like I say, at the moment, till it actually happens, we're not really going to be in the know. But again, it's still potentially a huge event. But like I was saying, if you think of a question later, you can put it in the comment section on Facebook and YouTube. And like I just proven, I will see it and I will reply to it next time I'm live on air. So bear that in mind. Okay, if there is no questions. Don't forget, I'll be back online again tomorrow at 8:30 a.m. UTC to cover the European session. And of course, we discussed what was said in the FOMC minutes from tonight. And again, at 12:20 p.m. UTC to do the watch along of the US CPI. And again, tomorrow at 2 p.m. UTC to do the US session. So please come and join me for that. If there is no other questions, not a problem. What I will say is if you're watching me on Facebook and you've enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and put up with me, my over-the-top enthusiasm for the markets, which I simply cannot help because I love the markets, then give me one of those. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.